Welcome to Drill On Earnings. We have quarterly results out from Broadcom. This is the fiscal first quarter 2025. And this is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We look at the most fascinating, the 50 most interesting companies in technology. Broadcom is absolutely one of them. There's this moment happening with these results from AI-related companies, particularly chip companies, where we're really seeing a separation between companies that are getting stuff done and companies that are running into problems. And Broadcom is getting stuff done here. So this of course, is a big supplier to Apple, but it also is a big supplier to the hyperscalers and a lot of the companies working in AI here. And we see some really strong results as a result of that business. So the numbers were good for this quarter, $14.9 billion. For the 3 months that ended in March. They're saying the numbers will be the same for the next 4 quarters, which is really good because fourth quarter tends to be really good for certain kinds of sales of consumer products. So strong guidance on top of a really strong quarter sent the stock flying. Let's dig a little bit deeper here. So revenues were up 25% on a year-over-year basis. And when you see my chart in a minute, well, you'll see it and I'll explain it. But GAAP net income of $5.5 billion. If you adjust out some costs out of there, payment to employees and stock options, merger-related costs for the VMware acquisition, I'll get to that in a second. They had $10 billion in first quarter adjusted EBITDA numbers. I don't like adjusted numbers, but it does tell a certain story. It's a story the company wants to be heard, usually. But that was a pretty powerful number up here. Now, I mentioned a 25% rise in sales on a year-over-year basis. That's good. Why is that good, even though the growth rate's down from over 50%? Because a year ago or 5 quarters ago, they completed the acquisition of VMware. So now that that company is completely folded in, they're showing 25% growth that has nothing to do with that acquisition, except for the growth within VMware. So they've taken VMware, done some good things. They're doing great things in their existing chip business. And they've also seen their margins come back. So operating margins, which fell below 20% after acquiring VMware, are now up to 42%. They've been marching up every single quarter since that acquisition. And so the chip business is great, but the infrastructure software business, VMware business, pretty good too. It's 45% of revenues now. And as a result, this company's got some diversification that they really didn't have 2 years ago. And I've now got the diversification, which should help them in a lot of markets, but it's certainly with AI and going so great in the chip business, the phone business doing okay. And yeah, the VMware business doing okay, looks good for Broadcom. Now, chip sales did not grow at the same rate that they had in the prior quarter, but still growing just under 12% to $8.212 billion in the quarter. And a lot of that driven not by the iPhone sales, but by AI. So when the numbers came out and the guidance came out, the stock went straight up. The stock was up 12% in after hours trading. And that's after rising 33% in the last year. Now, as a point of comparison, big Broadcom, a member of the S&P 500, NASDAQ, one of everything, a member of all these important indexes. But the S&P 500 is up only 12% in the last year. Broadcom's up 33% before the results from today. That just shows you how this company is really outperforming the rest of the market here. And why? Again, they're really succeeding selling into AI, and they're selling, they're competing with NVIDIA because they're making XPUs, the special chips for the hyperscalers. They don't tell us exactly who it is. We expect that it's possibly Amazon, Meta, maybe even TikTok designing their own chips. But the result is these guys are getting the XPU business to compete with the GPU business of AMD and of NVIDIA. Really good for these guys. And we heard from Hock Tan. Hock Tan was asked about this. What's going on with the hyperscalers? Here's what he had to say.
Yeah, it's down to in the case of the hyperscalers now, very much so. It's very driven by performance, and it's performance. What you're mentioning about on connecting, scaling up and scaling out those AI accelerators, be they XPU or GPU, among hyperscalers. And in most cases, among those hyperscalers we engage with, where it comes to connecting those clusters, they're very driven by performance. I mean, if you are in a race to really get the best performance out of your hardware as you train and continue to train your frontier models, that matters more than anything else. So the basic first thing they go for is proven. That's a proven piece of hardware. It's a proven it's a proven system, subsystem in our case, that makes it work. And in that case, we tend to have a big advantage because, networking are us. Switching and routing are us for the last 10 years at least. And the fact that it's AI just makes it more interesting for our engineers to work on. But it's basically based on proven technology and experience in pushing that and pushing the envelope on going from 800 gigabit per second bandwidth to 1.6 and moving on 3.2, which is exactly why we keep stepping up this rate of investment in coming up with a products where we take a Tomahawk 5, we doubled the radix to deal with just one hyperscaler because they want high radix to create larger clusters while running bandwidth that are smaller, but that doesn't stop us from moving ahead to the next generation of Tomahawk 6. And I dare say we're even planning Tomahawk 7 and 8 right now. And we're speeding up the rate of development. And it's all largely for that few guys, by the way. So we're making a lot of investment for very few customers, hopefully with very large serve available markets. That's, if nothing else, that's the big bets we're placing.
So there you hear it from Hock Tan, but what's it all mean? What's your big drill down earnings takeaway and the bite? The one number that tells us a whole lot? I've got that. So Broadcom Q1 2025 earnings, a really strong quarter. Here's your essential summary. The thing you want to remember, it's not the 25% revenue growth. That's 25% after they completed the acquisition of VMware, a really strong quarter. It's not the $14.9 billion in the first fiscal quarter, the 25% rise in revenues, as I mentioned, or the $10 billion in adjusted EBITDA, 10.1 billion. No, I think it's the resuscitation, the re-acceleration of chip sales into AI systems, driven really by that, not by the iPhone. 11%, that's a drill down earnings bite, the one number that tells you a whole lot. 11% growth in semiconductor sales in the quarter, really strong for Hock Tan and Broadcom. All right, thanks for checking out Drill Down Earnings. Check out our full earnings reports on YouTube. Subscribe to us on all the socials. This is the Drill Down Earnings.